Sweet. All right, welcome to Sunday prep. First prep of the month of the quarter as we're kicking off October. In terms of the economic reports, it's going to be actually a relatively really light week. I think the biggest things to look at, we got PMI throughout the week, but it's really going to be that ADP employment report on Wednesday. And if you scroll down a bit, we also have non-farm payrolls on Friday, and then of course the classic sporadic Fed speakers throughout the week. But those are the two big ones that I think we're watching for the week.
Yeah, that's basically it on the economic front. Nothing on the earnings side of things. So I do have some charts and some setups that I am looking forward to getting into, and do that right now. So as always, we're going to start off with Mama Market ES. The first thing that I am generally looking to do is see this interaction back at a previous low of year, 36.39. I think as long as we're below that, we can continue to make progress to the downside. One thing that was an interesting note for me was that POC moved here, which is also in this area that I would ideally want to short. And then just looking at this trend line as well, I do have two trend lines here that kind of make like a little zone as well. So in a perfect world, we would get a bounce. Maybe we would put in some type of higher low structure like this into the morning, get in here, reject this POC, reject zone, and end up breaking and try to roll back. To the downside, my only real target for right now in the short term is this 35.41 level. Reason being, this is about 3 Keltners down, and that's typically where we get a bounce. I've been waiting patiently for a more of an aggressive bounce than what we've gotten. I think we can easily get one back towards liquidity anytime soon, very possibly even this week. And I think it's very likely it does happen eventually. Or we can continue to grind down slowly like we have. We did have this strong pop last Wednesday, but with no real continuation. So if we do get another pop with continuation, my areas that I'd be looking to get aggressively short again, or where I would be looking to potentially call the top on another pop, would be around the 21. So around the mean. And that would be about from right here, a 200-ish point pop. So might take a day or two, and then around there, that's when I would start to look and see where we want to get positioned short. But as far as heading into this week goes, I'm going to see if we can continue just to grind down below these trend lines. And if we do get a pop, do we get a pop to this sell zone that I have mixed with POC, mixed with the trend lines? That is 3 reasons for me, just from on a charting standpoint, to go short. I really like that opportunity. That's going to be my first thing I'm looking for on ES. NQ is going to be pretty similar. Get into that right now. So NQ is pretty similar. We finally broke the previous low of year from back in, I believe that was March, June, July, March, June. Not March, June. June lows. And so we broke that. So similar thing, if we're just going to stay below, I think it leaves us more vulnerable. And if we're going to get above, can we work to this trend line? If we get to trend line, do we break and get back up to this sell zone right here, where I think there's going to be some strong resistance, which is around this 11,285 level. And then once again, if the market really does get going back, I would be looking for it to pop into this zone here before there's any real resistance. I do think if we can get back above this POC level, we can clear it. I think we have a good chance of getting that cover back into here. And then from the Keltner standpoint, I did not actually check for NQ, but it is about down here. So I'd be looking to potentially get to the top of this zone, if not right around here. So there is some room to the downside a little bit if we want to continue to grind down slowly, as we've seen before in the past. But we've also seen a lot of violent pops off it, right? We had this drop here to it with a violent pop. Right here, we grinded a few days, and then we popped pretty strongly back to the 21. And that's kind of what we're doing right now, is just grinding down the third Keltner. definitely want to trade and be aware of the pop that can happen, and a nice little short rally and a relief rally can ensue. And once again, my target would be roughly around here. So with that being said, that leads me to a couple names that I want to look at. Yep. All right, so that was my overview on the market, and now I'm going to dig into names and what I'm looking for and what I like on the name stand from a name standpoint. The first thing that I like is Amazon. What I like about Amazon is a dip buy, actually. As long as we are in this zone that we have been holding, Amazon's been holding up pretty nicely in comparison to everything else I've seen around the market. So I like this area a lot for a dip buy, and then I would scale out along the way. Once again, if a cover rally does happen, Amazon could rip all the way back to the 21, which gives it a good 9 points to the upside, but I would be taking profit along the way. I think 114 is a really good target, 116, 118, and 120. Next thing I'm going to do is I'm going to bring up the Keltner channel. So there is more room to go to the downside on Amazon. But like I said, it's interesting that it has been holding up a lot nicer than a lot of other names. So for me, if Amazon gets below this green zone, I am no longer personally looking to dip buy this name. Ideally, I would like it in this zone and then get a recovery. And my first target would be that 114. So for me, Amazon, I like to the upside. I'm not really interested in trading it to the downside. But if the market does turn around, I do like that. NVIDIA is another one that's pretty similar, actually. We've been trading in this channel here on NVIDIA. As you see, we are holding up decently well. Hasn't been destroyed like some other names, and we're not at the 3 ATR completely like the market is. So this is another name that if we do get a cover pop in the market or a relief rally, whatever you want to call it, a bounce off this trend line, a bounce off this these lows in this zone that I have identified as possible support, and at the bottom of this channel with targeting the top of the channel where the 21 resides, I think is a very, very good play. You do have POC and 15 above, so as always, I would look to manage my long risk as we get up there. But the more the market has a relief rally, the higher we could go, and this would ultimately be my highest target. Call it 132. So you have about 12 points in the tank for NVIDIA to the upside. And just like on Amazon, if we break below the screen zone, I'm not necessarily looking to buy calls, at least right out the gate. If we slowly keep trickling lower off it, that might change. But ideally off this trend line is where I want to allocate some long risk. So that is Amazon, that's NVIDIA. The next name I have on my watch list is actually going to be Tesla. So the thing I have on Tesla here is a big M. And I'll show you that right now. It's a little hard to see with all these Keltners everywhere. But once again, it has 3 Keltners down. Where does 3 Keltners down? It gets it down to here. For me, remove these studies. I see an M, up, down, up, down. And then as Watch just pointed out, they missed delivery numbers. They said something about they're expecting to be better next quarter, da-da-da-da-da. But I do think that definitely will give it enough to drive it down to this zone. 9, 10 points, depending on your entry. Maybe we get some type of pop here. For me, as long as we're below this 270 level, I would like a short to try to finish this M. As you see, boom, boom. Well, Jesus. Hold on. Mess my M up. They know. To complete the M, we just need to get back down here. So that's what I'm ultimately looking for. A little short pop would be ideal, but if the market does not cover and then does not have a relief rally, I think Tesla will very likely get here. And then to make it even slightly better, depending on how many contracts you have, if you have any runners, we do have a gap fill below there. So if you only have a couple contracts, definitely would manage. If you have more, guess what? I think there's a little bit more on the table, potentially down to 250. I will delete all these lines later. I don't want to make you sit here watch me delete lines for 5 minutes. And as always, I will be posting these charts in the charting channel. So yeah, that is Tesla. The next thing that I want to be aware of and watch this week is Apple. I'm not necessarily planning on trading it personally, but Apple was the strongest on the way up, and it took a while to give it up. And one thing that I noted was last week, Apple was leading the charge to the downside. Apple has led the market all year It's a huge name. It's weighted insanely heavily in NQ. And if it wants to keep going below this key level that I have identified right here at 138.27, does it try to get towards its previous low of year? We have a while. We have a ways. Now, what does that look like for the market? I don't know. I feel like that would implode the market to see it go down another 9 points. Is it possible? Of course, absolutely. Do we get some pop first? Possibly. But as like I said, I'm watching Apple as a gauge more than anything. If we do continue to bleed, the market's going to continue to bleed. If Apple can find some support and hold itself and try to work its way back up, because it has so much liquidity above, the market may be able to find a short-term bottom. And that is that for Apple. And then the last name that I have on my watch list for this week is going to be Shop. So Shop is trading in a channel right now to the downside, and all year, hold on. All right, bet just cashed. Yes, sir. We're bouncing off this zone, bouncing, and we have finally broke it. So as I prefaced in last Sunday, now that we broke, every time we get back up to here, I am looking to short. So last week, we did get here, and it would have been a really good short opportunity. And I'm looking for that opportunity again, especially with liquidity there. We have the 15, we have the 21. We have this zone that was once such strong support. I believe for the future of Shop, that's going to be really, really strong resistance now. So if we can get this pop back up here, I would be looking to grab the short back down, try to take it down to 28.71 and then 26.38. I'm not really interested in playing calls on Shop. I'm not really interested in playing shorts anywhere other than up here. As I've covered everything else, I think there's plenty of opportunity in the market, up, down, sideways, however you want to trade. I think there's names there. I have some names that I'm only looking to short, some names I'm only looking to go long. And then as always in the market, looking to do whatever the market tells us to do, whether that be up or down. That is really it. One thing I did want to finish on here is I know last Sunday we had a brief discussion on if I was going to be bringing my view on equity names and growth stocks and dividend stocks and what I find is good buys and good value. Yes, I'm going to do that. For me personally, I don't think the bottom is like today. So I'm not in a huge rush to grab anything personally. But I will go over a quick little brief summary of the few things I am watching and where I would kind of like them. And yes, that channel will be updated with all of these names and charts. The first thing that I am watching is TQQQ. I'm just going to actually go to the weekly here. So this is just a leveraged index of the Qs. You know, if you believe the market getting back to all-time high, I definitely think there's really good upside on TQQQ. I'd be looking to grab it a little bit lower. We're already breaking back through COVID before the drop happened. And I'm going to, at 10, I think it's definitely worth having some in your portfolio. Some other things that I am currently holding and looking to buy is ET Energy Transfer here. Pays a dividend quarterly. A name that I've had since COVID, and as we dip, I'm going to look to continue to add. I am watching this big picture trend line on the weekly on Energy Transfer. Maybe we break it like the name I'm about to show you did, and we absolutely crumble, but this is a name that has been a staple in my portfolio, so I do like ET. And then I also really love PSEC. I love PSEC because it has monthly payouts. And I had it from a long time ago. I think my average is still under 6 on this. And I was buying all in this zone here. So these are just 3 different areas on the chart where I would look to be buying. For me, PSEC, I don't look at it as like buying for growth. I look at it as buying for income. Every single share you buy, you're going to get an extra 6 cents a month. So, you know, you could do the math. As you get lower, I would be looking to add in this zone, and this zone. And that's where I'll be personally adding to PSEC as well. My absolute favorite thing in the world, as you guys know, is Dutch Bros. At this point, I would love to get it back down 25 to 20. This is another name that I believe in long term as well. And with all these names being brought up, I'm not saying that I think the bottom happens in 3 weeks and we V-shape recovery back to highs on everything. So depending on how patient you are and how much time you want to give something, is maybe what I would look at buying. But for me, I love Bros in the 20 to 25 range. I think over the next decade, Bros is going to be massive. And I really look forward to being able to buy more shares of Dutch Bros in this zone. And then the rest of my list just contains of massive tech stocks. There's Apple. I would love to get Apple around 100. Apple around 100 would be beautiful. That's been my target this entire time. Do we get there? I don't know, but the closer to 100 it gets, the more interested I am in buying equity in Apple. Google is another one, same thing. We're already starting to break 100, and so if you want my honest opinion, I think very long term, Google below 100 is a steal, and it will return to over 100, depending on how much time you want to give it. For me, I would love to see it get down to this like 70 to 80 range before I start adding heavy, but I do think Google is a good buy below 100. I don't think Google is going anywhere, so that's something I believe would be really good to hold. Another company is going to be Amazon. I feel almost the same. Below 100 is really good. We might be able to even get lower though, but for me, my buy zone is this 90 to 100 range. It's not there just yet. Basically, our previous low of years were around there. We bounced really nicely. So that is a name that I believe in super long term and is going to be a great buy and great hold. And then the last company that I have interested in is Tesla.
Sweet.
I do think Tesla has such a big cult of a following that it is going to be worth and continuously gain value over time. I don't think Tesla's going anywhere. You could argue it was overly valued, and it has been overly valued. I will not disagree with you there, but I will say getting Tesla around this zone long term is going to be a good buy as well. So those are my 8 names that I am personally either already invested in or actively looking and monitoring to actually get some equity in it. And yeah, but that's really the prep.